Good afternoon, everyone, and welcome to today's webinar. My name is Alex Paul from InvestorStream, and I'll be your host today. Joining us today, we have Southern Palladium Managing Director, Johan Odendaal, who will provide an update of the company's first interim UG2 mineral resource update at the Beingwenyama Platinum Group Metal Project, located on the eastern limb of the world-class Bushveld complex in South Africa. Now, Johan will provide a short presentation on this progress, followed by a Q&A session. Please feel free to send in your questions via the chat platform, in the question pane in the GoToWebinar control panel, or simply email them to me at alex@investorstream.com.au. You can also download a copy of the presentation by navigating to the handouts pane in the control panel. Finally, a copy of the webinar will also be available on Southern Palladium's website and social media platforms later today. But for now, I'd like to throw it over to Johan to kick things off for us. Johan, the floor is yours.
Thank you, Alex, and good morning to the South Africans who dialed in, and also to our Australian investors, good afternoon. This presentation is specifically aimed at giving you some feedback on our first interim UG2 resource update, which we released recently, and certainly, you know, this ore body surprised us on the upside. So our presentation today will specifically be aimed in giving you just some feedback on the results, where we are and where we want to go to. Alex, you can flip to the next slide. Basically our disclaimer, and I assume and accept it as read. Just to give you some background again on this project. It's a large, shallow, advanced exploration project in the heart of the eastern limb of a Bushveld complex, and we're right there amongst the major producers, tier 1 producers, and as you can see there, these producers in terms of 4E annual production in the order of 200 to 300,000 ounces per annum, 4Es. We are busy with a 2-year exploration program, and specifically targeting to deliver a PFS for a significant new mine, and also submit a mining right application. In our recent release, we stated that we now have 22 million ounces in resource, and there's still a significant exploration target that we will explore in the future. We have a single community, the Beingwenyama, who is strongly supportive of this development. You can switch, Alec. Next slide. If we look at our achievements in the past 12 months, we certainly delivered what we said we're going to do, and so far we're on track. We listed on the ASX and also on the JSE on the 8th of June 2022, so we're one day away from our first anniversary. And if we look back at what we achieved, we had a fairly successful capital raise of 19 million Australian dollar. During that time, we also signed a framework and cooperation agreement with the community, which governs our relationship with the community. And end of last year, we completed an initial scoping study, which of course we couldn't release at that point in time because it was based on inferred, but it gave us a very good idea in terms of what we want to do, and also in terms of mining the Merensky and the UG2, which sequence is the best. Based on that, we proceeded with the feasibility study, which we are currently busy with. We now at a point where we completed 12,000 meters of drilling, and in the process we extended the resource area further east. We had a significant increase in the UG2 resource, and what we see as well with this ore body is quite a good resource conversion rate, and that is from exploration target into inferred, and inferred into indicated. Our mining right application is progressing well, and we are ahead of schedule with that. If we look at the capital structure, very much the same as it was when we listed. We're currently sitting at a market cap of Australian dollar 43 million and converted into rand, 550 million rand. We still have cash in the bank, 13 million Australian dollar, and of course we have a benefit of a weakening rand. And certainly, you know, if we look at this program, fully funded and comfortable that we will achieve without going back to the market, and we'll discuss that in more detail a bit later. If we look at our share price more or less where we listed, and I think all of us, and I think in general, we see more macro elements that's impacting and influencing the share price, not so much the project itself. Can we move to the next slide? In our exploration program, we specifically focused on the eastern side of the two farms, Eerste Geluk and Nooit Verwag. And the aim of that was to obtain the reef intersections, and that includes both the Marinsky Reef and the UG2 in that shallow eastern portion of the ore body. And that was also to give us a better understanding of the grade distribution and update our geological model. Also, just as a bit of background, you know, if we look at this ore body and this map of the two farms, you know, on the eastern portion we have the Marinsky Reef, which is the top reef outcropping sort of in the middle of a farm, and then the UG2 underlaying up to the border on the east. So when we drilled, of course, some of the borers further east didn't intersect the Marinsky Reef for that specific reason. We through this drilling now establish the dip of a UG2, so we've got firm confirmation on that one. It's dipping now at in the order of 6 degrees. And what we also found was that the faults in the dikes in that northeast portion of the ore body is not as large as we initially modeled it. And in that cross section, you can see on the map that yellow line AA, and the cross section here below is can show you initially we had in 2021 much more variance in terms of the reef, but with the additional borers now much more smoother, and we can get a better idea now in terms of dip, and also some of the faults that we expected much more smoother than initially modeled. Next slide, Alex. So based on the drilling and assaying that we received, we now increased our UG2 resource by 39%. From the initial 8.38 million ounces to 11.65, which is quite a significant increase on the UG2, and also important for us because that's our focus reef at the moment. And in total, along with the Marinsky Reef, that now gives us a total of 22 million ounces in resource. The Marinsky Reef, in our drilling, we did intersect, as I said, a couple of borers more to the west, intersected the Marinsky, and we are busy updating that resource specifically for that reef, and that will be released fairly soon. So if you look at the map that we have here, and that insert is the 2021 classification, and back then we had the blue basically exploration target, and the purple the inferred, and you will see towards the east completely excluded the far east block as we named it now. And if we look now at the new block, you can see that the exploration target now extended to the east. That's that dark purple Far East block, and also to the south. We for now excluded what we call the dome area. It is an uplift and more structurally complex. And what we decided is to rather move a drilling that was allocated for that area to the east, and it's just better money spent, and we can see the results. Quite a large block there, and also in terms of ounces, significantly added to those ounces. What we also found in this results is that we were able to convert some of the inferred into indicated, and that is 2.56 million ounces into indicated, which is certainly a surprise on the upside. As far as the reef width and the grades go, very, very similar to what we initially expected in our 2021 announcement. So the ore body very much in terms of a drilling so far, as I say, not too many surprises on the negative side, rather on the upside. What we also established, of course, was the pearl splits, which we initially estimated at 44 platinum, 44 palladium. You will see now with the assaying that we've done for the UG2, slightly higher platinum of 46% and palladium 42%. And of course, the rhodium at close to 10%. We've also, during this program and assaying, also assayed for the 7Es, and that 7Es is additional 3 PGMs that we have in the resource and the reef, and that is iridium, ruthenium, and osmium. And of course, iridium is becoming quite an important metal now in the production of hydrogen, and hence the reason why we now assaying for 7Es. So now that we have a fairly good understanding of the ore body, our focus now is on improving the value metrics of this ore body and the project. So our aim now is basically based on two areas. So one is what we call the payback area. And the payback area is basically that area that we delineated there that give us enough ounces that will cover the capital expenditure for this project. And hence the rest is basically then returned to shareholders. So considering also additional capital expenditure, of course, of stay in business capital. But nevertheless, that gives you an idea of the area that will pay back our capital. And what we want to do with that payback area is now further drill it out to give us a larger indicated area. Secondly, now we want to look and understand the area further to the west, and you will see here specifically that southern horse block. That whole area there, the northern and the southern horse block, is basically an area that's lifted up. And what we want to do now and establish through our scoping studies and studies that we're busy with is that we can now look at a second access to the ore body. And what it does is basically allow a much faster production ramp up for us, which will of course improve the value matrix of this ore body. What we then also plan is to update our scoping study using the results of what will come out in this additional exploration that we will do. So we will have a next, what we call a second resource upgrade towards the end of this year, and then also update the scoping study. Our completion of the PFS and our maiden ore reserve, that is still on track. And we are now getting into a position where we will have enough indicated relative to inferred, which give us a fairly good ratio in terms of announcing that also into the market. So our goal for the next 36 months, of course, we will continue with our drilling, and the intention is to bring more rigs onto the farm from the current 5 rigs to 8 rigs, and that drilling will continue with the aim to finish the drilling for the scoping study towards the end of October. That means that we can do that second interim resource update during November and December, and then also update our scoping study during this time. And that will give us a very good indication in terms of value and returns as far as that second entry into the ore body goes as well. We will continue with the drilling at the same time, and depending on what we find in that horse block, we will then focus on a specific area where we want to have that second access, and of course the drilling there will be focused then on increasing that block, and that's a fairly small block, it's about 1 kilometer by 1 kilometer, into indicated as well. That will take us then into the first quarter of 2024, and that will then lead into finalizing the pre-feasibility study, and then set us up to declare our first maiden ore reserve, probably towards the end of the first quarter of 2024, beginning of the second quarter of 2024. Our social and labour plan and the community upliftment program is progressing well, and as mentioned previously, we accelerated the mining right application, which was originally aimed for February. We brought that forward, and we announced previously that we aimed for September, and that is on track. So going into 2024, what we need to do then, and then we're moving into a new phase of this project. Of course, up to 2023, beginning of 2024, our program was over a 2-year period. We fully funded, and as we move into the DFS or feasibility study and final decision making, that will happen towards end of 2024, and there's some infill drilling that we need to make as well. That takes us up to 2025, which is then the year in which we will then aim to start construction. Then just in summary, we also attended the Junior Mining Indaba yesterday, and you know, what's so important for me in terms of a good project is certainly its location, its management, and also the project characteristics. And if we look at this project, we do have all of that. We are absolutely at the right address. We're up there amongst the tier 1 operations. We've got good infrastructure. I mean, despite the disruptions that we have, you know, with Eskom and electricity here, we still have very good infrastructure in South Africa. And with what we're currently doing, you know, we now, as I said, focusing to improve our knowledge on the larger area to optimize the value matrix. We believe that this project is solid on the technical side, no problems. And so far, it's just external factors that's influencing the stock price. We are attractive on an EV per ounce basis at this point in time. We are certainly still there to take advantage of, you know, the green drive, global green drive, and PGMs are up there in terms of autocatalyst and cleaning the environment. Management team has an outstanding track record, and we can see in terms of delivery so far, both on the SPD side and on the subsidiary side on the ground. Very, very good management and board that we have. So all in all, the project, as I said, surprises on the upside, and our mining right application and the project in general is ahead of schedule. Alex, thank you very much, and we can open the floor for questions.
Thanks, Johan. Thanks very much for the presentation. Really appreciated some fantastic developments, especially happening of late and heading into the next 6 months. Now, look, I'd like to refer back to the prospectus that you lodged in last June. You said it would take around 2 years to move Bangwenyama to a mining right application. You've touched on it briefly in your previous slide. Now, we're about halfway through that original time frame. Can you just talk us through, now that you're essentially tracking towards that target, are you still confident that it could be fast-tracked following your recent announcement about the increase in mineral resources?
Alex, yes, as you rightfully mentioned, it was a 2-year period, so that means June 2024 was sort of a delivery of our pre-feasibility study and mining right application. And if we look at where we are now, and certainly the surprise came on that large indicated block of 2.56 million ounces, and we're now getting into a position where we're quite comfortable that we will very soon have quite a large block in indicated. As I said, we're looking at that payback area, getting that into indicated, and that will certainly put us very close, or actually there, in terms of our milestones that we need to reach. So overall, in terms of funding the project, of the project capital that we and cash that we still have in the bank, I've got no doubt that it will be fully funded for this period, and no need to go back to the market, and I'm pretty confident that we can finish this project in time.
Thanks, Johan. So now that you've converted 2.56 million ounces to an indicated resource and expanded the inferred resource at Bangwenyama to more than 11 million ounces, what are the other key objectives that you're focused on in the second half of the year? You've touched on it in your summary just in the previous slide, as I mentioned, but can you just sort of restate for us what your key objectives are as we head into the end of 2023?
Alex, yes, I think, an exploration program always changes, as you progress. What we see with this ore body, again, it's just shows us the Bushveld complex is so consistent. But I think, if we look at our program so far and what we planned, and that initial scoping study, although we couldn't release the scoping study into the market at that point in time because of just in general ASX restrictions of what you can release in terms of confidence levels, it did give us a good insight in what we need to do, where we need to focus on, and what we plan. And it's all now starting to come together quite nicely. The eastern side of this ore body, we now understand reasonably well. The reef, very, very consistent, the faults and where we expected it to be more complex, it's not that complex. So entry into this ore body, and that is sort of our main decline, of course, will then access an ore body that is a fairly large block, which we believe we can access, and then moving into that western portion and that horse block. That is now our focus, and we decided to do an updated scoping study, because giving that we can have a second access into that ore body will certainly increase the value of this project in terms of its returns and NPV, and also right there at the beginning, accelerate the production and give us a much more steeper production increase than we originally planned in our initial scoping study, which of course was then just aimed at one axis and then putting the decline down towards the west. So certainly, I think overall, our objectives in terms of the second half of this year is to get the ore body, get to know the ore body better on the western side, and also now getting into a position to increase our confidence level in terms of converting inferred into indicated. And again, we're seeing so far an excellent conversion rate from inferred into indicated.
So for Australian investors who may not know South Africa so well, this project, as you mentioned, is situated in the heart of the Bushveld complex, which is the major source of PGMs globally. With this, the latest resource update, how would you compare the PGM mineralisation at Bengwinyama to the major Bushveld producers next door?
Alex, if you look at the Bushveld complex map, it's basically like a saucer shape, and then we've got an area further north, which is called the Platte Reef. But if you focus on the area further south, we've got two lobes, the western lobe and the eastern lobe. And if we then focus on the eastern side, very, very interesting is that, throughout the Bushveld, and you can follow both the Merensky Reef outcrops and UG2 right from the north to the south. And of course, if you look at both reef and grade, in the area where we are and our neighbors, reef is very similar. In terms of our reef sitting at 70 centimeters, you will also see in our resource estimate, we've got 70 centimeters for the UG2. Now, that 70 centimeters is estimated over the main chrome reef. Now, what we do find just north of us is on top of the main chrome seam, you find three triplets, and that cause when you mine that area, hanging wall basically caves in, and what happens then is you mine that 70 centimeters plus another 20 centimeters and footwall 10 centimeters. So in total, what we see just north of us is a mining width in an order of 120 centimeters. Now, if you look at what we currently have in our ore body, very, very interesting is that throughout the area, we don't find those triplets. And what it means is that we can actually narrow our mining, and focus on just the chrome reef, the main chrome reef, plus the footwall as well. So overall, if you look at our mining width that we will probably mine, will be more narrower than further north. And of course, it will also mean that there will be less dilution, in your grade delivered to mill. In terms of the mining itself, throughout the Bushveld complex, if we look at mining these reefs, and not talking specifically the UG2 at this point, our neighbors, mining that reef very, very successful. And the industry now for many, many years were able to mine that. So for us, it's not something new. It's proven mining methods that we need to deal with, and no issue with that. Also, of course, if we look at the Marinsky Reef, although we do focus currently just on the UG2, but if we look at the Marinsky Reef with a much higher platinum to palladium ratio, it will come into our plan eventually. A much wider reef of close to 2 meters, and that we will certainly mine mechanized instead of a more conventional hybrid method that we're looking at for the UG2.
Thanks, Johan. So looking at the market more broadly, can you just talk about the supply and demand outlook for PGMs over the medium term?
Yes, Alex, I think, if you look at the PGM market, and you look at where we were and where we are now, and the PGM market in general was quite depressed for quite a number of years, and what we've seen in 2019 was a market that started to pick up, and there was certainly a new drive and a renewed interest in the PGMs, and we noticed in our platinum basket for both the UG2 and the Marinsky quite a significant increase. And of course, markets and typically, commodity markets do overact, and what we see now is the markets in these commodities normalizing. It was expected, and I think looking forward, what we're seeing now, and that is specifically on the demand side. Let me cover that first. I think the general consensus, and for the first time, if we look at the analysts and consensus out there, very similar. I think if we look at consumption of these 3 metals in particular in the industrial demand side, of course, it is hydrogen, autocatalysts, and fuel cells. And if we look at the combination and where the application is, what the expectation is out there is for internal combustion engines to be finally phased out. Expectation was that we could start to see a decline in internal combustion engines, and of course then the demand for autocatalysts starting to decline by 2030. But with the current status and of the global economy and where we are in terms of progress in terms of green application, it looks like the 2030 decline that was expected is going to move out. So what that mean in particular for palladium, rhodium, and platinum, of course, is that there will still be a good demand for these PGMs in the autocatalyst sector. There will be, of course, the shift. What normally happens with these PGMs, and that's what's making them so unique, is that we see thrifting between, in particular, platinum and palladium. When one price is too high, you'll see that platinum comes or palladium comes in as an alternative, and we currently see that happening. But what we foresee, and I think the consensus is out there, is that platinum and palladium will move more in tandem with each other. In particular, now that there's the application of platinum also back into the application for internal combustion engines, specifically for petrol or gasoline. So overall, if we look on the demand side, maybe for palladium, not as strong as platinum, because for platinum longer term, apart from autocatalysts, there's also the alternative demand side in fuel cells in particular. Platinum is using as a catalyst in fuel cells, and also platinum and iridium is used in the application for hydrogen production. So certainly a more brighter outlook for platinum than palladium at this stage. And rhodium is still fairly balanced market moving forward. If we look at the supply side, and I think the focus now is on South Africa, in particular with what we experience here, so-called load shedding. And load shedding, in simple terms, is power cuts because of the supply of or limited supply of power in South Africa compared to what we consume. And we've gone through various stages, and maybe I can just elaborate a bit more on where we are and what the impact of that is on the platinum industry, in particular in South Africa. Of course, South Africa supplies 75% of the world's platinum, 39% of the world's palladium, and close to 85% of the world's rhodium. So South Africa is a very, very important supplier of PGMs, and what happens in South Africa, of course, it's important in terms of supply and demand balances. So if we look at load shedding, power cuts, and the impact thereof, and over the past few years, we have seen power cuts, and Eskom has got availability, and that is sort of available dispatchable capacity in the order of 43,000 megawatts. But due to plant maintenance and so forth, we look at a available capacity of 30,000 megawatts. Now we already see that demand exceeds that, and that becomes quite a significant problem for Eskom, of course. Now on top of that, we have now these load shedding schedules that have been introduced, and it's various stages. If we look at as I said, 30,000 megawatts, every stage that we have, stage one, of course, is 1,000 megawatts shortage that they have to load shed, and we move up just late stage 6. Of course, it's 6,000 megawatts, which is significant. The platinum industry through stages 1 to 4 has not really been that much affected. Platinum, the mining industry in general, have been the preferential clients to Eskom, and you can't just stop mining, in particular underground, if that happens, and of course also smelters and so forth. You can't just bring that to a standstill. So through stages 1 to 4, we haven't really seen too much of an impact, but as you move towards stages 6, that is where it becomes problematic. And you also have to look at the frequency of load shedding as well. Of course, if you get stage 6 once in a while, it's not too much of an impact, and the same with stages 1 to 4. And in the past, the frequency was fairly low and not too much of an impact. But recently, frequency of load shedding increased, and also we moved into stages 6 more often. Now, what it means for platinum is that there's a significant supply shortage or deficit that is expected for, in general, actually all 3 PGMs going forward. And if this is not resolved, that could become quite problematic. And there's quite an interesting research pieces in the market, and one of that is Dr. Dave Davies. And if you look at what his expectations are in terms of load shedding, and if we look at the lower load shedding of stages 1 to 4, and a frequency of 175 days throughout the year, we can expect, even at those levels, at a frequency of 175, we can expect, that South African production could decline by as much as 15%. So that is significant, considering the importance in terms of supply, and that shortage or decline can even increase to 30%. If we move to higher levels of 5 and 6 at a more regular frequency rate. So electricity supply is becoming more and more of an issue for South Africa and South African operations, and that's why we've seen recently announcements by the industry that the industry is looking at alternative power, and that is in various ways. We've recently seen just across us, Samancor to Batse Chrome is looking at a 200 megawatt solar plant, and if you look at the area where we are, that is probably a suitable alternative in terms of power. So we elevated in our feasibility studies certainly this issue, and we are currently looking at various ways and means of reducing our reliance on Eskom. But I think Eskom in the long term will still be there as backup, but it is important for us to start looking at alternatives as well. And certainly in our studies, we have elevated that to look at alternative power.
Thanks, Johan. So given the project's position within the Bushveld complex, it appears that the project's proximity to existing infrastructure remains a major investment attraction. Now, with the resource increase you've confirmed, broadly speaking, how will this proximity to infrastructure benefit the project's overall economics?
Alex, you know what, when you are in South Africa, or you South Africans, you deal with power cuts, you sometimes think that we don't have significant infrastructure. But if as soon as you move outside South Africa, you realize that the infrastructure in South Africa is still there. If you look at specifically our project, we still have access, and that's paved roads, or as you know it in Australia, or tar roads, up to the entrance and actually going into our project. So as far as roads go, very easy access. Water, we've got a pipeline running past our project, so it's easy to access water. There's a new dam, the Whip Dam that was built just recently. Currently, the pipeline source water from a river further north, at Willifants River, but the pipeline will be connected to this new dam as well. So that's a stable supply of water for us. If you look at skills, more ample skills in that area, it's a mining area now for many, many years. So that's all there. Electricity, the infrastructure is there. So all in all, in terms of infrastructure, very, very easy to connect to these. What we also need to understand in terms of the platinum industry is that the barriers to entry for a junior is high. And I'm talking now beyond South Africa as well. And what we quite fortunate of is that if we look at the downstream beneficiation that industry is established. But in terms of offtake is established. So that makes it easier for us to enter into this market. Of course, if you look at all the mines, basically, mine and then delivered on site to a plant which consists of mill and flotation, and you produce a flotation concentrate, and that of course then gets transported to the smelters, and hence you from the mine need to look at offtake agreements in terms of smelting, base metal refining, and also precious metals. And that is all in place for us in South Africa. It takes about half a day to get your concentrates to the smelters, which is quite short. So that problem is something that we don't need to deal with. Overall, infrastructure is readily available in South Africa.
Thanks, Johan. So just to finish, what would you regard as Southern Palladium's major point of difference?
Southern Palladium's major point of difference. So, sorry, Alex, I just didn't get your question there.
Yeah, so you talked about the South African infrastructure, and you've talked previously about proximity to infrastructure such as smelters, for example, and you mentioned that the downstream logistics as well. Given that you've already previously spoken about the comparisons between Southern Palladium and the other major producers in the Bushveld complex, for those investors who are sort of wanting to know how Southern Palladium is positioned in the Bushveld complex, what would you say to them is your major point of difference compared to everyone else in the same position? And
maybe, Alex, what I can also add to that, because that's also a question that I regularly get, and that is, is there still, can a junior come in and make a success, in the platinum industry? Because if we look at the industry in general, it is big suppliers out there. But if you look at past successes and you look at past failures, and we look at our project, and then also to answer your question, what makes us different, there's a number of things that I believe attributes of a good project, what I see in Southern Palladium and this project, and firstly, it is management. We've got very good management running this project, and we can see it in terms of delivery. It is there. So it's management with experience, the management that is delivering what we said. If we look at the ore body, the second thing, of course, very, very important, if we look at past successes, is the depth of an ore body. And we're quite fortunate that we are the only junior that's got an ore body which is shallow in the eastern limb, and that is significant. That is quite a huge benefit that we have compared to some of the other juniors in that area. Thirdly, important as well is the size of this project. 22 million ounces is big. This is now becoming quite a big project and a significant resource. Then we also look at grade. We right there in the middle of a fairway, and if we look at first our UG2 grade at 7.7 grams per ton, that's a good grade. And also, although it's measured over 70 centimeters, we know that it is mineable. And of course, if you look at our pearl split, which is a ratio between platinum, palladium, and rhodium, the question that I get is, we look at a shift in the market towards a more favorable platinum price. What is the outlook for this project? And we've made those and we did those calculations, and we'll have to see quite a significant increase in platinum for the Merensky Reef to become more favorable in relative to the UG2. So our focus remains on the UG2 for now, because we still have quite a high rhodium content in that reef, and not to forget, of course, the chrome content. We've got a 30% chrome content, and chrome at this point is also quite a significant contributor to our potential revenue stream. So I think that, if you look at what we have in terms of geology, in terms of reefs, and also what we have in general in South Africa, we certainly do have a big project here, and a project which could become a tier 1 producer in future.
Fantastic, Johan. Well, look, that's all the time we have today. Thank you all for joining me, and I'd just also like to thank Johan for presenting and taking the time to answer some questions. Now, Johan, before I let you go, do you have any final comments to leave with us today?
Alex, yeah, I think if we look at the past year, and as I said, it's tomorrow is our first anniversary. And you look at what we said right at the beginning, and where we are and what we're delivering. I can, and where we are in terms of our cash balance. Certainly, I think looking forward, we are now getting in a position where I can comfortably say that we will be able to deliver a project into the market a year from now, which is our 2-year period, and we will be able to deliver that PFS that we initially said, and we are also now becoming closer and closer in terms of our milestone of delivering an initial first 2 million ounce reserve, and so I'm quite comfortable that we are now in a position to do that, given that the results that we received so far.
Fantastic. Well, everyone, as I mentioned before, a recording of the webinar will be on Southern Palladium's website and social media platforms later today. I'd like to take this opportunity to again thank Johan for presenting. That wraps it up for us here. Thank you, everyone. Have a great day.
Thank you, Alex.